Good afternoon, this is Sean Golding with Golding & Golding, here to discuss a little bit about what to do if the streamlined filing compliance procedures, otherwise known as streamlined procedures or an IRS streamlined disclosure, is not the taxpayer's best option. Oftentimes, taxpayers will reach out to us, tell us they want to do streamlined, and then it turns out for one reason or another, it's just not the best option. Maybe they didn't file original returns, they're already under audit, they've been penalized. Let's talk through it. So, as we always like to begin, who is a U.S. person? Who's even required to file a tax return and report their foreign accounts, assets, investments, and income? Three main categories: U.S. citizens, lawful permanent residents, foreign nationals who meet the substantial presence test. Typically, it's going to be a visa holder like a B1, B2, EB5, H1B, L1, who's here for a significant amount of time over the past 3 years in a 1-to-1, 3-to-1, 6-to-1 ratio, and it's what's called meet substantial presence. You don't want to meet substantial presence. If you do, then you get taxed just as if you were a U.S. citizen. Lawful permanent residents, for people who are permanent residents who live in a treaty country, they may qualify for a treaty exception to be treated as a non-resident for U.S. tax purposes. That would limit their reporting and tax. If they qualify, if they meet substantial presence, qualifying makes it sound like a good thing, right? If they meet the substantial presence test, then instead they may qualify for an exception like the closer connection exception or one of the other exceptions on Form 8843. Okay. So let's say there's a taxpayer. They're a U.S. person for tax purposes, at least they were during the time period in which they didn't disclose, and they didn't file tax returns, or maybe they filed tax returns, but they didn't report their foreign accounts, assets, and investments. So, a little bit of research, you'll probably find the streamlined procedures, and it's a program for people who are non-willful, they're not under audit, and then it kind of veers off depending if it's domestic or foreign. Now, domestic or foreign only refers to the country of the taxpayer. Do they live in the U.S. domestic, or do they live overseas foreign? It all refers to offshore. And something else to think about, when the IRS uses the term offshore, it's nothing nefarious. It could be interchanged with other words, foreign, overseas, things of that nature. It doesn't mean you have money in the Bahamas or Belize or something like that. So first, in order to qualify for the streamlined procedures, either version of the program, you have to be non-willful. So if a taxpayer is willful, they don't qualify for streamlined. Sometimes when taxpayers get rejected and they show us the paperwork that got rejected, typically it's because they were willful. You can't be willful and sorry. Like if you were willful during the time period, then you just don't qualify for the streamlined procedures. Unfortunately, the distinction between willful and non-willfulness is a very slippery slope. It's very ambiguous. There's no bright line test. We have a ton of other free information on that if you'd like as well. If the taxpayer didn't file original tax returns, they don't qualify for the streamlined domestic offshore. So there's streamlined domestic, right, and streamlined foreign. In order to do streamlined domestic, the taxpayer has the opportunity to amend the returns, which presumes that they filed original returns timely. Timely is also up for debate. What's considered timely? We've spoken to agents many years ago when there was a hotline, if you could imagine, just for streamlining. The agents had made it seem like, if they're a little bit late, it's not fatal. But, if you can't file original returns with it, which was what they had told us on a couple of different occasions, and which is clear in the instructions. So, if a person did not file original tax returns, they do not qualify for the streamlined domestic. If they qualify for streamlined foreign, then they can file streamlined foreign with original returns. And of course, if the taxpayer is already under audit or penalized, you can't use streamlined to get rid of the penalty, to reduce it, or if you're under audit or examination, you don't qualify for the streamlined. One of the eligibility requirements that the taxpayer is not under audit or examination. So what do you do if you don't qualify for streamlined, right? It doesn't mean, all hope is not lost. There are other options. There's something called the delinquency procedures. There's two versions, delinquent F-bar and delinquency procedure, let's call it. Delinquent F-bar assumes all you have is the missed F-bar, no 8938s, 3520s, things of that nature, no unreported income. Taxpayers can still pretty much get a penalty waiver under most circumstances. Delinquency procedures are otherwise known as Delinquent International Information Return Submission Procedures, DIRSP, used to operate the same way. It was for taxpayers who didn't have unreported income, but they maybe didn't do 3520, 5471, 8865. And in November of 2020, I believe it was, the IRS changed that program so it's no longer, an automatic penalty waiver similar to a delinquent FBAR. Now, most of the code sections you'll find taxpayers can show they had reasonable cause and not willful neglect. Then they qualify for reasonable cause, and then there's no penalty. It's not reducing the penalty. Technically, the IRS cannot penalize you if you have reasonable cause. Of course, the problem being two perfectly ordinary agents can look at the same set of facts and come up with different results. So with reasonable cause, the problem will be even if you're non-willful, you can get penalized. Those penalties can far exceed what you would have been penalized under Streamlined. And now there's something called relief procedures, okay? This is for taxpayers who want to expatriate, and they may potentially be subject to other taxes. Maybe they haven't filed for several years. For taxpayers who want to expatriate, typically they will do Streamlined and an additional 2 years, or they might qualify for relief procedures, but it's very specific requirements. We have found in our practice that most taxpayers do not qualify for relief procedures, but of course, if you're going to expatriate, then it's definitely something to consider because there's a lot of benefits to this alternative to Streamlined. We have a ton of free information available on our main websites and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, and it's something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.